Hello, sorry, I was
Yasna, hi.
disconnected.
Yeah, I am.
Sorry, guys, I was disconnected.
Yes, sir.
Hey, Yasna, bolo.
I haven't I haven't
Okay,
received
okay.
any more request to join. Can you please suggest them to send it me again because I was disconnected. Maybe that's why it's not been showing here. Should I proceed to our discussion? Hello, can you hear me? Hello. Sorry,
Hello.
I was again disconnected. All right, let's proceed to our discussion. So this is what the accounting equation that we have mentioned: asset equals to owner's equity plus liability, and short it's also been mentioned as A equals to OE plus L, or liability. So now let's see to the owner's equity portion or owner's equity part. What does the owner's equity
So, what is
means?
the difference between like capital and owner's equity?
Yes, I'm coming to that. I'm coming to that. So what does the owner's equity means? Claim of the owners. So what happened in the owner's situation? Initially, they invest some amount of money that is known as capital. Whatever they invested from their own part, this is non-capital. Why do you think that owners invest capital in the organization? What is their intention?
To get the maximum return.
To get some return, basically to earn some profit from the organization. There could be some losses as well. So if there is any profit or loss, that will be affected, that will affect the total claim of the owners or total owner's equity of the owners. And sometimes we can also see that the owners of the organization is withdrawing money from the investment they have made or from the claim they are going they have on the organization, and that part is known as drawings.
Drawing.
That is called, yes, exactly, this is known as drawings. So basically owner security will be affected by these three activities: the capital investment, by initial capital investment or the additional capital investment by the owners, the profit or loss the organization is earning because this initial investment was made by the owners. So whatever profit or loss been earning by the organization is basically a claim of the owners. And sometime, for the personal reason, partially or fully, if the owners draw the amount of investment they have made, that is known as an drawings.
So, can you repeat?
Okay. So one thing is that if you are late, it is very difficult to start it again from the beginning. So you have to be cope up with that.
Sir, actually, I joined exactly at 3:30. I requested to join,
Uh-huh.
but I wasn't able to enter the class. So, um,
Okay.
I had been able to
Uh,
enter the class
yeah,
late.
got your point. Got your point. No problem. But I haven't. Whenever I received any request to join, I instantly try to accept it. All right. From the very beginning, the things we have started discussing is that whenever we have reviewed our previous discussion shortly, then we have moved to the next discussion that regarding to the accounting equation. But before moving to that one, we have made a statement that whenever we are handling accounting activities, we should think that an organization and the owners of an organization must be separate. That means the organization and the owners have own legal entity, so we should consider it as a separate legal entity and we should think separately. And whenever we are handling the accounting activities of an organization, we should think from an organization perspective. That is the first things we should keep in mind. Then we focused to an example that is related to that if you want to start a business, you may need some amount of money, say for example 200 crore taka, but all of this amount may not on our hand. Say the owners, we are the owners, we have 70 crore taka at this moment. Can we start the business? It is only possible if you can raise the remaining amount of money from other sources. Say some of your friends have mentioned that we can raise our fund from creditors, bankers, lenders, financial institution, etc., etc. There might be some external sources. With that external sources, we can raise this fund. So this 130 crore has been collected from external sources, and previous 70 crore actually comes from the internal source. They are the owners of the organization. This is how this 200 crore taka has been collected. And as we have mentioned, organization and owners are separated, and in accounting we are thinking from an organization's perspective. And from an organization's perspective, organization at this moment have a cash of 200 crore taka. This is an asset of the organization. And out of this 200 crore taka, 70 crore taka will be claimed by the owner. This is known as owner's equity. And remaining 130 crore will be claimed is a claim of the outside parties, the external sources. This is a liability for the organization. So now we can see 200 crore equals to 70 crore plus 130 crore. That means 200 crore is an asset. Asset equals to owner's equity plus liability. So this is actually known as accounting equation. That means whenever we are handling the accounting activities, we will handle this accounting equation, and this accounting equation will show us that the total asset of the organization is equals to total liabilities and owner's equity. This is the equation: asset equals to owner's equity and plus liabilities. In short, we can also express it like that: A equals to owner's equity plus liabilities. That is also another form of accounting equation. Now we are emphasizing on the accounting equation, sorry, owner's equity activities of an organization. Owner's equity is basically the claim of the owners. How this been changes over time, or how it has been affected over time. Whenever any initial investment is being made by the owners, this is known as capital, or anything is invested by the owner, it is basically known as in capital. Why the capital investment is made by the owner in an organization? To earn some revenues, to earn some return, as we have mentioned. This is the profit or loss of the organization. So if any profit or loss arises in an organization, that will be claimed by the owner of that organization. That's why profit or loss will be affected or adjusted with the capital of an organization. And sometimes the owner of an organization can draw money from the organization as well, maybe for personal or other purposes. Partially or fully they can withdraw money from the organization, and that will be known as in drawings. That means capital, profit or loss of the organization, or drawings of the from the organization will affect the owner's equity of the position, owner's equity position of the organization. Secondly, how can we determine the profit or loss? How can we determine the profit or loss of an organization?
The revenue minus expenses.
Revenue and expenses. If you can remember our last session, we have shown that we can determine the profit or loss in we can determine the profit or loss. Ishana, uh, what is your query?
Sir, I think you're not sharing your screen.
Okay. In our previous session, whenever we prepare our financial statement, we have shown that by preparing the income statement, we can determine the profit or loss. And we have shown that by comparing the revenue and expenses, we can determine this profit or loss. So this profit or loss is basically the comparison of revenue and expenses. So we can elaborate this equation like that. So owner's equity is equals to capital plus revenue minus expenses minus drawings. Or in short, we can express it: C means capital, R means revenue, E means expenses, demands drawings. So owner's equity can express like that: capital, revenue, expense, and drawings. Now, owner's drawings, say for example, you have invested say 70 crore taka to start this business. After 2 months, 3 months, 1 month, you found that for your personal purpose or for another purpose, you need 5 crore taka, but you have no other sources to collect this 5 crore taka. How can you collect it? You can withdraw it from the organization, withdraw from your investment of the organization. This 5 crore taka at that time will be considered as an drawings or withdraw. Is that okay? So this is how we can show the relationship of capital, revenue, expense, and drawings with the owner's equity. Now, uh, with the increase of capital and revenue, how it is going to affect the owner's equity? What do you think? If capital and revenue increases, how owner's equity will increase as well? Say capital or revenue, if it increase,
So we can see your screen.
you can't. Sorry, I forgot. Oh, I was disconnected. Forgot to
Sharing
share.
is up.
Yeah, sorry, I was disconnected. Forgot to share it with you all. Probably it's now. Is it?
Yeah, sir, it's visible now.
Okay, cool. Okay, so if capital and revenue increases, as you have said, owner's equity will be increased as well. If capital and revenue decrease, owner's equity will decrease. This is their relationship. On the other hand, when the expense and drawings increase, how it will affect the owner's equity? It will, yes. Similarly, if expense and drawing decrease, owner's equity will increase. So there is an inverse relationship between the expense and drawings with the owner's equity, and there is a direct relationship of capital and revenue with the owner's equity. So this is the things we should keep in mind to handle the accounting activities, transactions of an organization, because we have to show this relationship with the accounting equation. We'll explain it more in details later on. So that's how the accounting, that's what the accounting equation means, and that's how the relationship among the components of the accounting equation. Asset equals to owner's equity and liabilities. This is the basic accounting equation. We now can explain that owner's equity is also related with the capital, revenue, expense, and drawings. And this is how the owner's equity will be affected with the changes of capital, revenue, expense, and drawings. In accounting, whenever we are handling the accounting, which activities we consider only?
The
Financial.
activities which can be counted monetarily.
Excellent. What does it call? Do you have any idea? Transactions. In accounting terminology, we called it transactions. What does the transaction means? It is an monetary units. Yep, monetary activities, or it follows the monetary units assumptions, or the activities which can express in terms of money, that will be considered as a transaction. So this is the first condition or first criteria to become a transaction. So it has to be expressed in terms of money. There is another criteria to become a transaction. What is it? This is, say for example, this organization have purchased an equipment. Is it a transaction?
Yes.
It's a transaction.
Yes.
Yeah. Uh, this organization have purchased a vehicle.
Yes.
It's
Yes.
a
Yes,
transaction.
sir.
It is a transaction. The owners of this organization have purchased a vehicle.
No.
Retailer?
If it's themselves, then it's not.
No.
From an organization, yeah, from an organization perspective, it's not a transaction. It's not a transaction. But from an owner's perspective, from an organization perspective, if you think from an organization perspective, it's not a transaction. But from an owner's perspective, isn't it a transaction for the owner?
So it's a
Sir, it is.
personal transaction.
It's a personal transaction. If you think from an owner's perspective, you are if you are doing an accounting activities of the owner, then it's a transaction for the owner, not for the organization. Okay. But if you are looking from an organization perspective, if anything purchased by the owner from their own sources, it's not a transaction for the organization. So the main criteria to become a transaction is it should be expressed in terms of money and it must affect the financial conditions of the entity or organization. These two conditions must be fulfilled to become a transaction. Now, in the second criteria, we mentioned about these financial conditions. Can you remember where we have shown this financial condition, or where have we discussed about this financial condition? Yes, sorry, sir. Financial financial statement. Which part of the financial statement shows the financial condition?
Sir, the income statement?
Have a look on that. Income statement shows the financial performance. Financial performance and financial condition are not same.
Balance sheet.
Balance sheet. Owner's equity statement shows the owner's claim, and in the balance sheet we can measure the financial condition of the organization. So to show the financial condition of an organization, it also known as financial position. What do you show? In the balance sheet, we can measure the financial condition or position. To find out the financial condition and position, what do we need to show?
Sir, the assets, liabilities, and
Owner's equity. The relationship of asset, liabilities, and owner's equity. This relationship is also shown in another place today. What is it? Accounting equation. So can I say that accounting equation shows the financial condition of the organization? Accounting equation, isn't it? It's an alternative measurement. So now if I want to explain the transaction or define the transaction, can I say any activities that can be expressed in monetary value and that affect the balance sheet, it's a transaction?
Yes, sir.
Can I say if it is affect the accounting equation, it's a transaction? Any activity?
sir,
Yes, yes, because accounting equation measures the financial condition. We can also express like that any activity that affect the monetary activity, monetary situation of the organization and affect either asset liability or affect the relationship of asset liability and owner security will be a transaction. Is it a correct definition?
Yes, sir.
Definitely. So this is about the transaction. If you are asked to define transaction, that's how we have to explain it. Any monetary activities that affect the financial condition or that affect the balance sheet situation or that affect the relationship of asset, liability and capital or that affect the accounting equation, that will be a transaction. If it is not, then it will not be considered as a transaction in an organization, or that will not be considered as a part of accounting activities for that organization. So that's how we have to detect, we have to identify the transaction first. Okay. Now we are going to focus on transaction analysis part, that we are supposed to, that will be the first step of accounting activities. So there are here you'll see that a number of activities of an organization is been given here, and what we need to do, we need to find out initially whether it's a transaction or not. If it is a transaction, what are the specific activities are related with that, then we'll see later on some other issues. So first one, the owners of an organization invested 20,000 cash. Do you think that it's a transaction for an organization?
Yes, sir.
It's a transaction. So if it is a transaction, what are the changes going on here? And when you are supposed to look at the changes, you need to think,
Asset increases.
okay, what are the specific activities, what they are receiving and from whom they are receiving, or what they are sacrificing from an organization's point of view. Now think from an organization perspective. When the owners of this organization invested in the organization, what changes going on in the organization? Are they receiving anything? Are they paying anything? What is it?
They're receiving money.
They're
Cash.
receiving $10,000.
Yeah. So there is an activity regarding the cash. Now, this cash is receiving or paying?
Receiving.
Receiving.
They are receiving this cash. Who? Owners or organization?
The organization.
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 We are thinking from an organization's perspective or owner's perspective?
Organization.
Organization's perspective. So organization has received this 20,000 cash from the owners. So they have received cash. So cash is one activity and its increase. From whom they have received?
The
From
owner.
the owners. From the owners. So if anything invested by the owner, this is called owner's equity. It's a part of owner's equity, but it's actually initially we'll categorize it as an capital. It's a part of owner's equity. Now owner's equity has increased or decreased? Increase. Exactly.
Increase.
If you have any confusion, please let us know. Because before this investment of 20,000 cash, there was no owner's equity or owner's investment. So when the owners has invested this 20,000 cash in the organization, their claim also increase. That's why we mentioned that the capital increase or owner's claim has been increased. Jawad,
Sir, are
Sir,
the capital and equity different?
I am going to explain it again to you. Yeah, Jawad,
kind of same question. I thought capital and cash is the same thing.
capital and cash are not the same thing. Capital and cash are not the same.
Capital and equity.
Capital equity is a part of capital is a part of equity. Capital is a part of equity. If you can remember, we just have discussed the relationship of owner's equity. This one, have a look at that. Owner's equity changes with the change in capital, revenue, expense, and drawings. What does the capital mean? Anything invested by the owner from their own source, that is called capital. Revenue, the organization earns. Expenses, organization's income. By comparing revenue and expenses, we can determine the profit or loss. And if anything is drawn by the owner from the organization, is called drawings. So basically, this capital is a part of owner's equity. Okay.
Okay, sir.
Sir, I had a question, sir.
Yeah, please.
So since capital is being invested to the business, so
Mhm.
it has to be returned, right?
Uh, it has to be returned, but there is no time limit when you need to return.
So, sir, it can be said that it's a one sort of current liability.
What sorts of?
Current liability.
No, it's not a current liability. Liability means if you have any claim to the external party, and owners is not being considered as an external party, they are considered as an internal party. If you can, if you see or if you notice, you can see at the beginning we have mentioned this one: internal source and external source. If you have to pay anything to the external source, that will be considered as a liability. Then liability is categorized current and non-current or long term. But owner's equity means the internal source. It doesn't need to be categorized as current or non-current or short term or long term. Okay.
Yes, sir. Thank you.
Okay. So we can see by that this is a transaction, and by this transaction two activities are involved. One is cash, another one is the capital, and by these activities cash is increasing as well as the owner's claim, owner's security or the capital is also increasing. Now purchase office equipment 11,000 cash. Is it a transaction?
Yes.
Yes.
Yes, sir.
Now tell me, what are the two specific activities are related with that?
Cash and
Cash
equipment.
and capital.
Cash and why capital? Organization have purchased. Is there any activities related to the owners? Do you think that these activity
Asset increases.
Rent.
asset? And now which asset?
Office
Current
equipment.
Current asset.
What is the name of this asset?
Long-term office
Equipment.
equipment.
Equipment. Office equipment or equipment. We have to record it like that. So this is a specific activity. You need to find out if it is a transaction, what are the specific activities are related with that. One is that cash they paid, and another one that by paying this cash they have received equipment. Now tell me, okay, cash is increasing or decreasing in the organization?
Decreasing.
decreasing.
Cash is decreasing. And equipment
Increasing.
Increasing.
increasing. Increasing. Excellent. Next one, receive 15,000 cash for service performed. Service performed means
Transaction, yes,
Yes,
sir.
it's a
it's a
transaction.
transaction. Service performed means these organizations do not provide any tangible thing. They provide different types of services to their customers. Yep. So what are the activities related with
Cash.
that?
Cash
Cash and
activity, sir.
accounts receivable.
Cash and
Revenue.
no, it's basically called as service revenue. What is this? I'm going to explain it when we are going to define the different types of account. It will be clear to you. This is called service revenue. That means they have earned it. So one is cash account, another one is service revenue account. So cash is increasing by that
So is
activity.
service revenue.
Yes, both are increasing. Increasing. And the last one, paid 1,000 cash for rent. It's a transaction as well. And they have paid
Cash.
cash. Why they have paid?
Decreasing.
Yep. And for rent purposes. Cash decrease and activities regarding rent has increased, isn't it? Because there was no activity regarding rent before that.
So I
Sir,
think
won't the
there,
rent go to the expense
Yeah,
section?
I'm going to that one. I haven't discussed that point yet. Rent
sir,
is
I think there's a mistake in your serial number. Like
no.
between
I just dropped one of them. That's why 134. Forget about the serial number.
স্যার রেন্ট ইনক্রিজ জিনিসটা বুঝতে পারি না।
Okay, I'm going to explain. It will be clear to you now. After and there is another point to be discussed that will help you to understand these scenarios more clearly. So this is how we have to analyze the transaction. We will come to that point again after discussing one more point. So in the accounting equation, we have seen that initially a asset equals to owner's equity plus liability. Then we have found that owner's equity means capital plus revenue minus expenses minus drawings. Sorry.
Is this a part of a balance sheet, right?
Which one?
This, capital plus revenue.
Yeah, it will all will affect to the balance sheet. So do you agree that we can also express the equation like that, isn't it? We can also express the this is the elaborate explanation of the equation, accounting equation. So what are the things here? Asset, capital, revenue, expenses, drawings. Asset, expenses, capital, revenue, drawings. A means assets, E mean expenses, C means capital, revenue, and drawings. So we just have seen that how can we identify different types of transaction, and after identifying the transactions we need to find out what types of activities are related with that. After identifying this activity, the next step, we also definitely need to show the increase and decrease. The next step is to find it out what types of accounts are these. We can see that these are the five initial. What is another one? Liabilities. Sorry, I missed one. We can see that all the account activities of an organization can be classified into these five categories. So we need to find out what types of accounts are these, or what types of accounts is it. We also need to find it out after analyzing the transaction. And to find out what types of account it is, we also need the definition, or how can we categorize those types of activities. Now let's see what should be the definition of asset, expense, capital, revenue, or liabilities. So this is the initial two definition regarding the assets and expenses. Regarding assets, I want to define it like that. When any activity is incurred, and if you find it's an asset, this is how we should categorize it or define it. Any sacrifice of resources which will provide benefit in future, that will be considered as an asset. And to explain the expenses, we can define it as like this: sacrifice of resources which already provided benefit, that will be categorized as an expense. So this is the difference, or this is the basic definition of asset and expenses. Can you give me some example of asset? Say from BRAC University's perspective, what might be the assets of the BRAC University?
Land and teachers,
Land,
Plants, building,
building,
chair, table.
plant
yep,
and machinery.
furniture,
So
equipment,
lab
yeah,
equipments.
equipments, yep,
Computers,
yep, equipments, etc. So these are the assets of the organization. Why do you think that these are the assets for the BRAC University?
because they're helping BRAC University to generate revenue.
Yep. They are helping BRAC University to generate the revenue.
It will provide future
It
benefits.
you can use this land, building, furniture, equipment, computer for long. That means these
We
will
have control over them.
you have control over them as well. That's why they are considering as a asset for the BRAC University. What might be the example of expenses?
Rent,
Rent,
salary,
salary, electricity bill, gas bill, water bill. These are known as utilities, etc. So this can
Yeah.
mean, yep, yes, sir. This can be the examples of the expenses for the BRAC University. Now, why do you think that rent, salary, utilities are expenses? What is the reasons behind that? Because already provided the benefits. So, for example, we have paid rent for the month of January. Say, for example, we are in January now. We have paid rent for the month of January. Is it an this rent is an expense for the BRAC University?
yes, sir. Yes, sir.
Okay. So we are in January. They have paid rent. You want to categorize it as an expense. Say, for example, they paid rent with an amount of 30 lakhs taka. But out of this 30 lakhs taka, 25 lakhs is related to January, and remaining 5 lakhs actually been paid in advance to some of the vendors for February and March. So now you are handling the accounting records for January. This 30 lakhs, how are you going to treat it? Is it an asset, expense, liability, capital, or revenue?
It's an expense.
Full amount,
No, sorry. The January
Only
part is an
only
expense.
25 lakhs.
25
Yeah,
lakhs is considered as an expense, and remaining 5
and
lakhs,
that's an asset.
asset. Excellent. Excellent. So, how have we categorized it? Based on
We have already provided benefits. It
exactly
will provide benefit in future.
in future, based on this definition. So, whenever you are handling any issues, any activities, any topics, you will just have to focus on these 5 definitions. Based on that 5 definition, you need to find out, okay, we have find out this activity. How should we categorize this account? Is it an expense, asset, capital, revenue, or liability? Just follow these definitions that we are going to discuss. So, whenever you find anything, whenever you have spent something, and from that expenditure or expected expenditure, if you already got the benefit, you should treat it as an expense. If you haven't got the benefit yet, but you are expecting the benefit in future, that will be treated as an asset for the organization, as you have pointed out with this example. Okay. Now, capital. Capital, we already defined it. Claim of owners or investment by owners of an organization. Revenue, earnings from regular activities. That will be considered as a revenue of an organization. Earnings from their regular activity or regular operations will be considered as a revenue for the organization. Say, for example, what will be the revenue for the BRAC University? Yeah, tuition fees. Yeah, that tuition fees. What will be the revenue from the for the BRAC Beximco Limited or Beximco Pharmaceuticals?
By
S-
selling their medicines.
the amount they are earning by selling their medicine. Excellent. So this is the revenue for the BRAC University, and the Basic income pharmaceutical. So do you think that is there any difference between the revenue of BRAC University and basic income pharmaceutical?
Sir,
Sir,
BRACU is
BRACU's
only.
revenue is different.
How
BRAC is basically serving,
they are
is basically
providing?
using services,
Yeah,
yes,
they are.
intangible assets, and they are selling physical assets basically.
Excellent, excellent. So we can see that these two types of organization, depending on their nature, one provided services and they earn revenue, and another organization is providing some physical things to
Products.
us, physical products to us, and they are earning the revenue. And this revenue, when they are earning something by providing service, is called service revenue, and when any organization is earning by providing physical product, that is called sales revenue. Okay, so whenever any revenue you are dealing any revenue, if it is related to the service, you will record it as a service revenue. If it is related to the any physical product, then you should record it as a sales revenue. Say as you have mentioned here in this example, service revenue, because this organization have provided services of 15,000 cash, they don't provide any physical product. That's why we have recorded it service revenue. If they earn something by selling some physical product, then we are supposed to record it as a sales revenue. That's how revenue will be categorized: service revenue or
Sir,
the
why
sales
do we
revenue.
need to categorize it differently? Because they're the same thing, right?
They are the same thing, but you might, if your organization is providing both service and some physical product, you might be interested to know how much revenue you have earned by providing service and how much revenue you have earned by selling the physical product. If you don't record of these two things, is it possible to provide that information?
No, sir.
No, that's why we need to categorize it differently.
Sir,
Yeah,
our revenue and assets are very different things.
yeah, definitely very different thing. Say land, building, furniture, you are using it to earn revenue, and they will provide benefits for long.
Yes, but sir, the revenues are also will provide us future benefits.
How?
I mean, sir, the earnings from um, pharmaceutical materials will invested by for future
Mhm.
production.
So when it has been invested, it has been considered as an asset, and when you are using this asset is actually used for generating revenue. So basically, they are related to each other, dependent to each other, but they are not same.
Right.
Okay. And the last one, the liabilities. Claim of the owners is known as capital, and claim of external parties is known as liability. Say, for the examples we have discussed earlier, we have seen that this organization have taken a loan of 130,000 crore, 130 crore from the bank, lender, or other financial institutions or creditors. They are the this amount is the liability for the organization. So this is how we can see that from the equation we can see that these are the vital accounts for an organization. And when activity arises in an organization, at first we need to find out what are the specific activity, how they are changing. Now we need to find out how should we categorize these activities, what types of accounts are they. You don't have to raise your hand, please raise your voice.
Sir, can revenue be assets?
No, revenue cannot be an asset. Assets and revenue are two different things.
Like if someone uses their revenue as uses their revenue to further their business,
Say,
they buy some
got it,
equipments or
got it.
things.
Just looked at this example. This organization received 15,000 cash by providing service. So when these activities incurred, we find out what are the activities related with that. Sorry, sir. What are the activities related with that? We found that cash and service revenue. Now we have separated these two. Service revenue will be a part of revenue, and cash is basically an what types of account? What do you think?
Asset.
Asset. we separated it here, and we do not tell that yes, this cash has been received from the revenue, that will be an asset for the organization, but these two are not same. So the next things we need to find it out, what types of accounts are these. Say cash, you just mentioned it is always asset. Capital, what types of
Owner's equity.
owner's equity is a parts of owner's equity. Then by purchasing the office equipment with 11,000 cash, you mentioned that there will be change of cash and equipment. Cash is an
Asset. Asset.
assets. Equipment is also an assets. Receive 15,000 cash by providing service, cash and service. Cash is an asset, service revenue is a revenue. Last one, paid 1,000 cash for rent. Cash and rent. Cash is an asset and rent is an
Expense.
expense. That's how we'll categorize it. Now we can say that okay, by investment of 20,000 cash, two accounts are related with that, cash and capital. Cash is an asset, capital is an owner's equity, and by that transaction, asset increase, owner's equity increase. Got it? Asset increase, owner's equity increase. Purchase of office equipment of 11,000 cash. Two accounts are related with that, cash and equipment. Cash is an asset, cash is an asset, equipment is an asset as well, and with that transaction, cash asset increase, decrease, equipment asset increase. Receive 15,000 cash by providing service. Two accounts are cash and service revenue. Cash is an asset, service revenue is an revenue, and with that transaction, cash asset increase, service revenue increase. The last one, paid 1,000 cash for rent. Two accounts are cash and rent. Cash is an asset, rent is an expense. The effect into the transaction or equation is cash asset decrease, rent expense increase. This is how the increase decrease after a transaction can be identified. Have got some point? Or all right. Would you like to try 2 or 3 transactions to analyze like that?
Yes, sir.
Cool. So let us take an example from your book. What you need to do, things we have done with the previous examples, you have to do the same analysis here. For these 4 transactions, find out whether they are transactions or not. If they are transactions, what are the specific activities are related with that transaction, what types of account are those, and whether they are increasing or decreasing. Please try yourself, then we'll go for the cross check.
So how should we try?
Try yourself, then I'll cross check with you all.
So by invested, is it meaning that owner invested or
Yeah,
the
yeah, yeah.
organization
Owners
invested?
invested. Agency is the organization. Owners has invested this 15,000 cash for starting this agency.
Sir, done.
Cool. Let's wait for a few seconds. Can you go for the cross check?
Yes, sir.
Okay. Now, the first one invested 15,000 cash to start the agency. Basically, as your friend has already identified that whether it's an owner's investment or not, it's basically an owner's investment. So, is it a transaction for the organization?
Yes.
Yes.
Sir.
Yes. So, if it is a transaction, what are the activities related with that?
Cash,
Cash, sir,
capital.
and
Cash,
capital.
capital. So, cash is what types of account?
Asset.
Asset.
Asset. Capital is a part of
Owner
Owner security.
security.
owner security. With this in 15,000 investment by owner, what's the changes going on in the cash?
Both increase as well.
About
Both.
Excellent, both increasing. Sorry. Done. Second one, paid 600 cash for April rent. It's an April.
Yes, sir. Yes, sir.
Yes. Activities,
cash,
Cash
cash,
and rent.
cash and rent. Cash is an
Asset and expense.
Asset and
assets, rent
expenses.
is an expense. Thank you. Expense. Changes.
cash decrease,
Is, is cash
cash
increasing?
increase, rent increase.
Decreases,
Decreased.
cash decreases, and
Cash
Rent
decreases because you are paying cash. That's why cash reducing from the organization. And rent is an expense. There was no expense regarding
Expenses
rent.
increase.
In it's increased now. Third one,
yes,
it's a transaction. Activities,
Cash and equipment. Cash and
cash and equipment. Accounts,
both are assets.
both assets. Changes,
cash
Cash
decreases,
decreases.
equipment increases.
Equipment increases.
nice. First one, paid 900 cash for office supplies.
The office supplies expense and
It's in yes, and office
And
supplies,
supplies.
cash and so office supplies or supplies, whatever you like. Cash, you already identified it. It's always an asset. Supplies,
Assets.
typically it's an assets. Someone may also say that it's an expense, but it's better to write it down asset first. Then, based on the use, we will convert it to as an expense. So changes.
Cash
cash
decreases.
decrease,
Assets increase.
Excellent. That's how. This is how initial assessment will be done when any activity is incurred in an organization. That is a part of the transaction analysis, the first step of the accounting activities. That's how we have to do. In the next session, we will see how can we present it or show this relationship into the equation. But before,
Sir, can you say the difference between the cash and capital again for me?
say for example, you want to start a business, and that's why you have invested $50,000 to start the business. And when you invest $50,000 in the organization is receiving cash of $50,000 from you, isn't it? Receiving 50,000 cash, and from whom? From the owner of 50,000 K. Now you are not thinking from your perspective, you are thinking from organization perspective. In the organization, what happened? They receive cash, so cash is an asset, and from whom they received it?
The owner.
From the owners. And if anything invest by owner is called
Capital.
capital. That's how these two are different. That's how these two are different, and these two will be considered as a separate account.
Yes, sir, I get it now. Thank
Cool,
you.
cool, cool.
Sorry, can you explain like how expenses have an impact on owner's equity?
So, for example, is it okay if we discuss it in the next session, because we are going to for the elaborate discussion of this issue in the next session?
Okay, sir, no problem.
Okay. Or in short, just let's look at this relationship here. When the expenses increase, it will affect the profit. Profit will reduce. That will affect the owner's equity. Got it?
Oh, I mean, it's not a direct relationship.
It's
It's
not.
like
It's an
inverse.
inverse relationship, and with it goes with the profit situation of the organization.
Thank you,
Okay.
sir.
Okay. Okay. Now, just two more points here. Say, in that situation, they mentioned that they have purchased the equipment on cash, but there might be some situation that this organization have purchased equipment, but because of the relationship with the clients, they did not pay the cash. They agreed that they are going to pay this cash later on. That is known as on account. Do you think that this situation can arise?
yes,
Yes, sir.
Yes, arise. So in that case, what will be the two accounts? One is
sir.
Accounts payable.
one
Accounts
is
payable, sir.
equipment, and previously we have seen there is another account of cash, but in that case they are not paying cash, they will pay cash in future. They are liable to pay cash in future. This situation is called, as your friends already mentioned,
Accounts payable.
accounts payable.
So can I also write, sir, creditors?
We can write it down creditors. In US term they call accounts payable, in British term they call creditor. Both are same.
Oh, okay.
Okay. So two accounts, two activities are equipment and accounts payable. Equipment is an assets, accounts payable is an
Liability.
liability. Liability changes assets,
increases
increase,
and liability
liability
also increases.
also increase. Excellent. That's how it will affect. Another last topic. In our previous one of our previous examples, we mentioned that receive 15,000 cash for service performed. Sometimes it may happen that they provided service on account. 15,000 of services performed on account. That means they have provided services to their client, but because of their personal relationship, the client says that okay, I'm going to pay it after 2 months, 3 months, 4 months, whatever it is. It can also happen like the previous one. So when they provide service, what might be the accounts related?
Cash and services.
Cash and services. Do you think that they have received cash on account?
Or
No, they will receive.
revenue.
They will.
Cash and
One is
cash
revenue.
and will do
Yeah, one is service revenue.
service revenue.
One is service revenue. Another
And the
account,
other one is accounts payable.
accounts receivable. They are going to receive it. In the previous example, when they are going to pay, we called it accounts payable. But in this situation, they will receive it. They are going to receive that amount. That's why it will be called accounts receivable. So two terminology we have found here. When we are supposed to pay, that is known as accounts payable. When we are supposed to receive the cash in future, that is called accounts receivable. Service revenue is a
Revenue,
revenue. Accounts receivable is an
liability.
assets. You will receive it. If you have to pay,
Oh,
if you have to pay, it's a liability. If you are going to receive it, it's an asset. So revenue increase, asset increase, increase. That's how we have to handle it. That's how we need to make the initial assessment of any transaction. We need to find out whether it's a transaction or not. We know the criteria of the transaction. It should be expressed in terms of money and it must affect the financial condition. Then what are the activities related to it, that what types of account are this and how they are changing, increasing and decreasing. That is the initial assessment or initial screening to become a transaction or for a transaction. Okay, is that okay?
yes, sir.
All right, that's all from my part for this session. And whatever we have written here, you can see this. You'll find it. I already shared this Google Sheet with you all. It's already been saved there. You can go through with that discussions that we have made with that Google Sheet one. Do you have any more query from? Uh,
Sir, you mailed something that is that shows that it is not unsupported. It is in unsupported format like this.
that some of your friends also mentioned about this at the early session earlier of this session, that and some of your friends already are able to grab it and run it. What you need to do, you have to download the WinRAR software. Then you have to extract the file from them and you can run it. Now I have
Sir,
got
is this the class recording
this
of
is the class
this
recording.
session?
Yeah, this is the class recording. This is the class recording. The reason is that I have to convert it to the file winner, that class actual class size is much bigger and it was not downloading when I tried. That's why I convert it to different format and
It's no
uh,
problem, sir. We will manage it.
yeah, that's cool. That's cool from me. But I'll try to send the raw file as well. I'll try again today. Some of you face that difficulties.
Okay, sir.
Then that's all from my part. Yep, sir.
So I have a very basic question. So actually, I have no prior knowledge of accounting.
Mm.
So is this a kind of rule like there will always be two activities for every transaction?
Excellent question. When any transactions incurred, at least two accounts will be affected. There might be more than two activities, but at least two accounts definitely will be affected. Okay, we'll see. There might be more than that, but generally the first criteria is that there must be at least 2 activities. Thank you so much. It's a very excellent question. Yeah. Any other issue, any other queries now in your mind?
So like these are like journal entries, right?
We will go for the journal, but before moving to the journal, we need some assessment of that one. We'll see how can we drive to the journal. We'll use this
Sir,
concept.
what are our tasks for the next session?
Sorry.
What are the tasks we have to complete before the next session?
I haven't given any task yet. I haven't given any task yet. But yeah, after completing the next session, you'll find some tasks to do by yourself and also for assessment purpose or assignment purpose.
Sir, there was a assignment on the bar.
Yeah, this has been given in advance. It's been given in advance so that you can prepare yourself.
It
But
says 8 February.
yeah, don't worry for that one. Yeah. If you think, if you find that these topics have been completed, you can go for that one. And if you find there is still something to do regarding the transaction analysis, you can solve it after the no, after the next session. I'm taking some time. I'm not running at this moment because the reason is that these are the basic concept. If you don't have this basic concept, you will face difficulties in the remaining topics we are going to discuss. That's what I'm trying to explain it more details by taking some time so that you can understand the scenarios and you can apply your knowledge to think. That's why I'm taking some time.
So there are some students who are from science background.
That's why
They
I
will also be able to cope up.
yeah, that's why I'm very slow in the very early stages. You can see that whatever we are supposed to cover up to this session, I haven't covered it yet. The reason is that I'm going slow so that you can understand the scenario and you can cope up yourself.
Yeah,
Thank you, sir.
Okay.
So these are the basic terms, but still, it's difficult.
No. Yeah, because you are doing this on very first time, that's why you are facing difficulties.
Right.
But if you just try to follow what we are doing, you can see that it's a very interesting thing. It's a very easy thing.
Yes.
Okay. Okay. By this time, if you face any difficulty, feel free to communicate with me. I will try my best to resolve your issues. All right then. Thank you so much.
Yes.
Yeah.
Thank you.
Thank you so much. Thank you all. Have a good day. Good time to you all.
Thank you, sir.
Thank you.